What's up everyone, it's Kadi with Money Investing. In this video we are going to be talking about one stock that is going to be reporting earnings next week here, and I'm getting ready to basically buy this stock if it drops down to my fair value. So in this video I'm going to break down exactly what company we're talking about. We're also going to go over the intrinsic value calculation, the revenue, the earnings. We have talked about this company very briefly in the past. I've done a couple of videos, but it is a high quality company which is also or can be considered as a growth stock as well. So hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. And there is a 16% annual discount that does expire at the end of this month. And I also want to mention that we do have a Memorial Day sale right now on our courses. So the fundamental and technical analysis courses, the bundle is currently 60% off. And you get lifetime access to all the 80 plus video lectures and content and over 16 plus hours of tutorials and videos and content as well. So all that's going to be available, and the coupon code is going to be MEMORIAL, all caps, with the link down below. One more thing I want to mention before we get into this stock, that is going to be make sure that you do subscribe to our brand new channel. It's called Money Investing Reads. We're already up to 340 subscribers. I will be posting a lot of book summaries and book reviews. All the books that I'm reading, I'm going to be posting videos on there. It's not going to be as frequent. It's going to be probably once or twice a week, but it's going to definitely provide you with a lot of content, a lot of value, a lot of insights into the books that I'm reading. These books are going to be on finance, investing, trading, different types of research, analysis, philosophy, psychology. There's going to be a bunch of different genres that we're going to cover on this channel called Money Investing Reads, and it's going to really spark that discussion where we can discuss books more in the future. So the company that we are talking about in this video is going to be Lululemon, ticker symbol LULU, and they are going to be reporting earnings next week, like I said, on Thursday, June 1st. And the earnings estimate, the EPS expectations, is a little bit over $1.96, with the revenue also coming in at $1.92 billion. Now, I've been meaning to buy Lululemon for such a long time, but it's just never really dropped down to my intrinsic value, to my fair value. So again, we're going to take a look at what the company's earnings look like, what the guidance looks like, and then kind of reevaluate once the earnings are already out. But when it comes to the actual business, the company has had very, very strong, very strong revenues and earnings, a huge successful brand it's built over the years. So this is for 2022 compared to 2021. This was reported on March 28th. You'll notice that net revenues increased 30% to over $8 billion, increased 32% on a constant dollar basis. And the company operated store net revenues increased 29%, comparable sales up 25%. We got direct-to-consumer net revenue represented 46% of total revenue compared to 44%. Gross margins decreased a little bit to 55.4%. Income from operations was consistent at $1.3 billion. And then we also had diluted earnings per share of $6.68 compared to $7.49 on a year-over-year basis. So a little bit of a decline there. But adjusted diluted EPS came in at $10.07 versus $7.79. So we still saw about a 50% increase in diluted EPS with a 30% increase in revenue. Now this right here is also very interesting because this is their fiscal year 2023 outlook, as well as they're sharing the power of 3 x2. Basically what they're calling this as they want to double the business from 2021 to 2026. That's the goal there. They want to double their business in revenue. So they want to go from about $6.25 billion in 2021 to over $12.5 billion in 2026. And the key pillars of the plan are product innovation, guest experiences, and market expansion. And the growth strategy includes a plan to double men's, doubles direct to consumer, and quadruple international net revenue relative to 2021. So they've got very aggressive plans on growing their business. So Lululemon is definitely on the right track, and they are sharing these things with the investors and what their plans are. That's why I consider this to be a growth stock, because they are practically assuming, or they are focusing or targeting a doubling of sales between 2021 and 2026, so like in that 5-year period. Now for 2023, they expect revenues to be in the range of $9.3 to $9.4 billion and diluted earnings per share between $11.50 and $11.72 for the year. So if you consider where the stock price is today at $340, and if you divide that by $11.72, which is their forward earnings per share number, EPS, price to earnings multiple, are trading at 29 forward time. So I would say that that's reasonable because the growth rate is there. They are expected to grow earnings pretty well. So $11.72 at $340, that's a 29 times forward earnings multiple, which I would say it's quite reasonable. It's definitely not cheap, but it's not like super overvalued either. It's reasonable. Now, Lululemon, very, very consistent. Again, we've talked about this company a couple of times on the channel before, going from $1.5 billion to over $8 billion in 2023. And of course, the goal for them is to grow this number even more, 50% in the next 3 years to over $12 billion. Gross profit also going from $857 million to over $4.4 billion, pretty much 5x in that time. And operating income's gone from about $391 million to over $1.7 billion. Again, extremely profitable. Net income's also grown from about $279 million all the way up to $854 million, almost $1 billion. And diluted share count has gone down, so 146 million down to 128 million shares outstanding right now. Extremely profitable, like I said, gross margins over 55%, EBITDA margins at over 24%. Net margins can be improved a little bit, but again, it's a retail business, so you can't expect a lot. 10.5%, and we got very strong return on capital, equity, and assets. So they are very efficient in the way they utilize their capital and the way they utilize their assets on the balance sheet. This right here is going to be their balance sheet, so over $1 billion worth of cash with a little bit over $1 billion of debt. So they are sitting on a negative net debt, but just by barely, negative $84 million. So they do have more cash than debt on the balance sheet. Current ratio is pretty good. Quick ratio, not so much. That means they've got a lot of inventory on their balance sheet at the moment. So they need to push that inventory out so that they can improve their quick ratio as well. Debt to free cash flow is a little bit high, but that's not worrisome because, again, they've got more cash than debt on the balance sheet in the first place. This right here is going to be the valuation. So, again, on a P basis, non-GAAP forward, 29, the one that we just calculated. Price to sales trading at a little bit over 4 to 5 times, and price to cash flow trading at 24 to 44 times at the moment, with enterprise value to EBITDA trading at 17 to 21 at the moment as well. So we are a little bit on the higher side when it comes to valuation. And this right here, again, is the EPS estimate at about $1.99, $1.98 with a revenue of just over $1.92 billion. This right here is going to be that EPS estimate, and they are pretty bold. They are pretty solid at $11.60 and growing that all the way to $26 by 2029 and to over $46 by 2033. So they are pretty solid growth rates. And this right here, revenue of $9.3 billion, growing that to over $22 billion by the year 2033. So if you plug in some of those numbers, you'll notice that the EPS is expected to grow from $11.60 to as much as $26. That's a 17% growth rate for the company. And by 2033, that's over $46. That's a 16.5% growth for the company. So I would consider this to be a growth stock because, you know, that combined with the share buyback, I think it's going to put their compounded annual growth rate to even higher levels. So what we're going to do is we're going to plug in some numbers here. I'm going to be conservative. I'm going to go with, let's say, 14% growth here in earnings per share. So we're not going with 16%. We're not going with 17%. We're going with a little bit lower, 14%. And when it comes to price to earnings multiple, I'm gonna go with about 20. And 20 times earnings, I think, is going to be very reasonable, a lot less than 29. It's going to eventually compress that multiple as numbers get bigger and the growth rate also slows down. The PEG ratio is going to stay put at 1.43, 12% discount rate, 10% margin of safety, and we end up with a fair value of $282 per share. Right now, the price is about $340, so that means only 16 to 17% downside needed for the stock to be roughly at my intrinsic value based on these conservative estimates. This right here is going to be that sensitivity grid. So what you'll notice is, again, depending on your growth rates and depending on your P multiples, that fair value is obviously going to change. But for me, I think a 14% growth rate with a 20 times P multiple is sufficient, and it is very, very conservative as well. So you'll notice that we are going to start off at 24 times and eventually come down as the multiple compresses down to 20 times earnings with a price target of $553 in 2029 for Lululemon. This right here is going to be the technical analysis, and depending on the flexibility range, which is going to be around 268 to 296, I'm going to be very much interested in sort of like maybe starting a small position and getting a little skin in the game at around this green rectangle, which obviously is going to be a little bit lower than my intrinsic value, and that's exactly the point, right? I want to be able to buy the stock at an undervalued level. I don't want to just buy it at a fair value, even though that's fine. I mean, the company is going to be expected to grow, but I would still like to build that additional margin of safety. And if I can get this inside this green rectangle, which is going to be roughly in the 250s and 270s for Lululemon, I would consider myself to be fairly lucky here and fortunate to get access to these shares. So again, that's going to be that support, very, very strong area of technical support here. Lots of demand coming in for Lululemon. Of course, my intrinsic value sits at roughly around 282 based on these growth rates and these EPS estimates. Let me know in the comment section down below, what do you think about Lululemon, and what are you actually doing? Are you buying, selling, holding? What are your thoughts on this company? I would love to know. And right now, the resistance stays put at $387 per share. So this right here is going to be that level to watch as a resistance for Lululemon. So hope you guys enjoyed this video, find it helpful. Make sure that you drop a like, subscribe. Don't forget to subscribe to this channel as well. It's called Money Investing Reads. Again, lots of book reviews and a lot of insight into the books that I'm reading are going to be shared on that channel. So I'm super excited to get that started as well. As always, happy investing. And don't forget, 16% discount for the Patreon and 60% discount for our courses, fundamental and technical analysis courses. Coupon code is going to be Memorial. As always, happy investing. I'll see you all in the next video.